I would like to hand over the time to Mr. Raymond Singh to begin the presentation today.
Thank you. Good evening, everyone. So it's a very pleasure to have this opportunity to share with you our views and outlook on the China's economy as well, China market. So I think I hope that can be helpful to you all. Next page, please. Yeah. So first of all, is the a very brief review outlook on the China's economy. The first of all is the how's the performance of the China's economic growth, which is the GDP in first half, as well as the first, especially the first quarter, because the second quarter's figures is still not announced. So we have seen that Q1 GDP for China actually beat consensus by over 10%, reached like 5.3%. So we all know that from the figures announced, like consumption, investment, and export in Q2, we can say that it indicates that in the first half, without further aggressive policies by Chinese government, the GDP growth can be reached as high as like 5.5%. Okay, so we have to say that compared with the original consensus from the beginning of this year, Q1 and Q2 performance of China's economy in terms of GDP, this number is good. Okay, that is the first scale. And then next page, if we look deeper, okay, into three parts of the China's economy, we usually have three parts, right? Consumption, investment, and net export. So in the first quarter, the consumption actually a little bit lag behind the original consensus by the investors. It is not as high as like 5%. It's only like 4.7%. And also the investment export, we have to say that the investment actually a little bit beat the consensus, because within investment, the most important sector, the real estate market, is still down by like 10%. But overall, generally, the investment still, get a quite decent growth rate for the first half. And then the net export actually in Q1, the net export is quite weak. But Q2, we saw some marginal improvement in terms of the export by the auto sectors, export, as well as some manufacturing names or sectors that help the net export actually beat the original consensus by the investors. So that is the overall performance of the three parts of the GDP in China in the first half. And next page. Because that within the listed companies in onshore market as well as the offshore market of China, actually over 65% of those listed companies are related with the manufacturing sectors. So actually we usually describe the performance of those listed companies by PMI figure. So that is a very important figure. We need to rely on to do some predictions on the performance of China listed companies' earnings growth. So in Q1, actually, we saw that China PMI, especially until April, the trend is okay, because in Q4 last year, we saw that the PMI figures were still quite struggling. But in Q1 and especially in April, we saw a recovering trend of the PMI from below 50 to as high as over 52. So it represented that in Q1 to April, the activities of the manufacturing sectors actually expanded from a very struggling period of situation. But we saw that the in May and June, actually, the manufacturing PMI began to revise down a little bit moderately from like 53 to 49 or 49.2250 to this level. So we need to observe more or coming months to see whether the PMI recovery can sustain or not. Okay, it usually indicates the performance of the overall listed companies' earnings growth in China. That is very important. Next page, please. Besides PMI, actually, I believe most of the investors, they have very closely examined the pricing index in China for last like half a year, especially the CPI. Okay, because we usually identify or classify economy with negative CPI as the deflation zone. Okay, so that is very bad for the valuations of the asset in deflation conditions. So in China, we saw that the CPI began to goes to the positive area since late Q1. So actually in Q4 last year, the CPI ratio in China kept very low level, below zero. So actually most of the investors, they have concerns, right? They had concerns on the deflation risk in China. But since Q2 this year, due to the low base, as well as some, consumption or service prices soaring up, it seems that China is, way ahead of the deflation rates. It's began to come to a very moderate inflation area. So that is quite comfortable for the valuations of the financial market. But actually, the PPI figure is still not that good. It represents that the supply for most of the manufacturing sector still way out of the demand. Okay, so it need whether ever to increase the demand of the in China to solve the problems, to solve the oversupply issue, or to start another kind of the supply revolution to solve the oversupply issue, to decrease the supply. So that is another opportunities or risks we may see in coming months to be solved by the Chinese government. Okay, so that is also very important. But actually, CPI now is above zero is a good point, but PPI is still quite weak, is a negative point. Next page, please. Then we comes to the monetary policies as well, liquidity conditions in China. So we usually use M1, M2, and total social finance rate to describe the liquidity and monetary policies in China. Actually, the most important problem in China now is still that has very low level of M1 growth rate, because M1 actually indicates that business activities, it usually are those deposit held in the working or very short-term account, okay, in the very short-term deposit account rather than the long-term or mid-term account. So if people or entities, they put money into the very short-term deposit account, it usually indicate it will expand the buying behaviors for the business. So that's a good, right, for the total demand in China. But if more and more people or citizens or entities put money in the midterm or long-term deposit account, it usually indicates that people and entities are lack of confidence in terms of expanding their consumption or productions, right? So actually, the M1 figure now is still weak, okay, especially last 2 months due to some technical issues by the PBOC. Okay, they want to solve that the interbanking systems liquidity or over liquidity Yeah. So they do some tactical behaviors to lower the total social finance rate as well as the M1, M2. So we saw the M1 figure has been weak for last few months. So we need to observe more, coming months to see whether the M1 figure can catch up. If the M1 figure can catch up, it usually indicate that the business activities in China get very good recovery. If on contrary, if the M1 figures still kept very low level below zero, it still means that the activities of the business, both the private sectors as well as the government, is still quite weak. Okay, next page. Yeah, as mentioned before, here's the very important issue in China is the oversupply, right? So we saw that the demand in China is not that strong compared with the supply. Have you remembered that I mentioned that in the first half, the investment sectors within the GDP in China still goes up by 5%, even within the investment, the real estate sector is down by over 10%. So it indicates that the manufacturing sectors, they did a lot of capex. Okay, so they add up more, capabilities to build up their supply. So we saw in some sectors like green energy, like EVs, solar energies, they face very severe conditions of oversupply. So one way to stop the oversupply issue in China, it seems that the government, they need to take the responsibility to do some expenditures to lift up the demand. So actually, we usually use the broad fiscal spending figures to determine the directions of fiscal policy. Okay, because the Chinese government, they need to do more active fiscal policies to support the demand. But if you look at the figures in last few years, especially last year, even though the Chinese government, they always mention they need to take the very active behaviors in terms of fiscal policies, but it seems that last year 2023, the broad fiscal spending decelerated from the previous level. Okay, it indicates last year's the financial policy is not that active. So we saw some minor changes in terms of the first half this year. We saw the figure began to catch up, and especially some special bond issued by the Chinese government began to accelerate in May and in June. So we're pretty sure that in this year, it seems that the broad fiscal spending recover or began to catch up from last year's very prudent level. Okay, so that is a good for the total demand in China. Is a good, is one of the good points we want to mention. Next page. This chart shows the one of the most important concerns held by the investors, both domestically as well as foreign investors, which is the real estate market. We have to say that still till now, even we saw massive policies issued by the Chinese government since the end of April and beginning of the May. Okay, actually we saw that the property market still recover well. Okay, even though in some tier 1 city like Shanghai, we saw that 1 month or less than 1 month is the turnover ratio began to recover, but within the last few days, it seems that such kind of trend didn't sustain or didn't last. So actually, as we all know that since the year 2021, the Chinese government, they issue a lot of the limitation policies on real estate market. Even though this year they began to issue more policies to trying to support the market, but actually all those policies we saw still try to lift all those limitations one by one. They previously leveled to the market. Okay, till now we didn't see very aggressive support measures or policies issues by the Chinese government on real estate market on this sector. So it indicates it's still room or it's still tools helped by the Chinese government if they determined to support the real estate sector in my point of view. Okay, so actually we will wait and see whether after this month, especially there's a very important meeting held in May this month, whether more supporting policies towards the real estate market coming up. So that'll be a very another very good point we anticipate will come now to support the total demand in China in coming months. Right. And next page. So here shows some credit raise in different months held by the China's leading real estate developers. So whether the credit raises of Vanke will push the government to adapt stronger measures to rescue the property sector in coming months is still a very important signal for us to trace. Next page. And another catalyst we want anticipate to support the performance of the equity market in China or economy as well is the interest rate cut by PBOC. Okay, so actually previously by from the beginning of this year, we anticipate that the China's PBOC will cut the interest rate and lower the triple R after the Fed began to do the actual interest rate cut. But actually from the Q1, we saw that PBOC cannot wait to lower its LPR rate, especially the long-term LPR rate. It's just that the China PBOC as well as the government, they have the strong willings to support the economy as well as the real estate market. But actually now the overall the most important obstacles for them to even lower its interest rate, I think, is the behaviors of the US Fed. So actually whenever the US Fed began to first time lower its interest rate, we're pretty sure that PBOC or China PBOC will begin to do such kind of the monetary easing more aggressively. Yeah, next page. So from previous pages, I may demonstrate some concerns and the statistical of the China's economy, but we do see some brighter sides. Okay, some structural opportunities within China, especially China's economy. Usually, I think China's economy as well as the performance of the equity market is highly correlated with the policies. Okay, it's a highly policy-driven market. So during the two sessions, very important meeting held in Q1, actually we saw that the roadmap of China's government in terms of the KPI as well as the roadmap for next 5 months, 5 years, especially which sector or sectors will benefit from the policy support. Okay, so from this page, you can tell that some KPIs for the Chinese government, such as the GDP growth rate, will be have already been set at 5%. that some other important figures we want to mention, we have put them in red. And next page. And also, during 2 sessions, I think the most important phrase is the new quality productivity. It usually, I think it's quite in line with the new economies we mentioned previously for last few years. Okay, so I believe that indicate, for example, some sectors or specific sectors actually benefit from such kind of the new quality productivity with a encouragement or actually policies issue. So here's some highlights we want to mention during the 2 sessions. The next page. Then we come to the performance of the market. So actually, in the first half, we saw that actually China market did better than last 2 years, because last 2 or 3 years, it seems that there's only one direction in China equity market, is the downwards. But in the first half this year, it seems that some indexes, a typical index in China equity market, began to catch up a little bit, even though it's still quite turbulent. But we do see some changes in directions. Okay, it's not the one direction of downside. So after the upside or downside of the first half, we saw the valuations of different market. Okay, for example, the CSI 300, which represent the onshore market of China, the P TDM ratio, something like 11, and actually the quantile ratio is like 20%. So it's still very cheap compared with the other markets, such as the Japan market did quite well this year. Okay, the U.S. market, of course, is much higher in terms of valuations. Okay, even though we have a lot of concerns on the outlook of China's economy as well as the financial market, but one thing is for sure, that now China's equity market is cheap. Okay, compared with other regions, so it have already pressed in a lot of uncertainties as well as the pessimistic views. Okay, so that is one thing I want to mention. Even though we are uncertain to the performance in short term or midterm of China's equity market as well as economy, but we're pretty sure the trough valuations have already pressed in a lot of uncertainties and pessimistic views. And then the sector performance for China equity market seems that is quite defensive and dividend driven. Okay, in a bearish market, it seems that the institutional investors as well as some retail investors, they began to do more conservative plays or defensive plays. So actually, they rush into the dividend sectors such as banking or financials and mining, materials and telecom, etc. So that is the different performance between the high dividend stocks as well as growth stocks. So actually, growth stocks still a lot behind in the first half this year. So that may have some problems to be a turnaround play in the second half of this year. But actually, we will take more time to do the trades or examinations. Right, and next page. So within the growth sectors, okay, actually we are bullish for the on the following structural opportunities. Okay, so the first of all may comes from the AI industry. The supply chains, including the hardware as well as the applications. Actually, we have already seen that hardware capex in US and in China sort of. So actually, a lot of the hardware names, especially the China names like the optical module providers, Zhongji Inlight, etc., they benefit from such kind of soaring demand. But actually, probably in next few quarters, we can explore more, opportunities from the software side, the application side. So that also can help us to generate some good opportunities or returns. The second one within the growth sectors may comes from the high manufacturing, especially the humanoid robotics industry. Actually, it's also correlated with the rapid development of AIs because the AI has brought a leap in perception level, and also one of the most important players within the sectors is the Tesla. Okay, has led the industry from a prototype to future industrialization. So actually, that will directly benefit China's supply chain because originally within EV areas, it seems that the Tesla's the most important partners, supply chain names, they are China names, right? So actually, they are directly, benefit from such kind of the a new wave. The third opportunities we are bullish may comes from the semiconductor localizations in China. It also, besides the intrinsic cycles of the semiconductor, an, another very important players in China, Huawei, actually has promoted the domestic semiconductors to develop further. Okay, so we have already seen that the domestic wafer fab they continue to expand productions, and also the localization rate improve a lot within last few quarters. So such kind of trend can last according to our research. And consumption actually did not well in last few years because we have already seen a transition of consumption behaviors in China. It's quite different from last few years because usually since like 2015 to 2021, we usually talk about the upgrade of consumption upgrade in China because due to the PSL, due to the renew of those old houses or real estate, it seems that during that time, the China citizens, their wealth actually expanding due to the soaring up price of the real estate market. So actually, during that time, actually, China citizens tend to buy a lot of, premium goods or luxury goods. So usually at that time, we favor those stocks correlated with the consumption upgrade. Okay, but actually during last 2 years, it seems that such kind of the wealth imagination have already gone. Okay, so it seems that the citizens in China they tend to buy more, good goods like the value for money. Okay, so we saw that the very successful platform grow bigger, like Pinduoduo, and some other platform like TikTok or Douyin in China, they grow bigger and bigger. But we saw some, luxury providers or merchants such as the China duty free, they face very hard term. Okay, so we need to follow such kind of transition of consumption behaviors to find more, names benefit from the value for money trend in China. It's quite, same or have some similarities with the patterns back into 1990s happening in Japan. Okay. The last one is the after the anti-corruption in healthcare sectors in China, we may find some good opportunities to invest in. Okay, now it's still, you know, not end such kind of anti-corruption, so we keep very close eye on that, uh, long-term areas or long-term tracks. And then actually, uh, I want to do a very brief conclusions on the sectors or investment patterns that we favored in China in midterm and long term. So we have already seen that the decelerating speed of China's economy, right? So I think the framework or the sectors we favor may be different from previous years in China. And actually, if we take Japan's experience as an example, it seems that since 1990s to now, actually there were only four, uh, sectors may generate absolute return as well excess return in Japan market. So the first uh, aspect or the first sector or theme is the high dividend stock, right? Because the long-term interest rate or real interest rate actually kept going down in Japan in last like 20 or 30 years. Probably the same story may happen in China. So which sectors can benefit, or which type of investment can benefit from the decline in real interest rate? It seems that the high dividend stock is a very easy answer, right? The second opportunities may comes from the we say a business going abroad. Okay, so during 1990s, a lot of the Japan companies they going abroad. They began to investment in foreign countries, do investment and set their plans or factories there to you know do more capabilities overseas. And we saw the same pattern happens in China now. We saw more and more China companies began to going abroad. Okay, they began to do investment in Asian countries as well as the Mexico and European countries. So actually, due to very limited domestic market growth, okay, so we believe that the overseas market will be a blue sea, a blue ocean for most of the China's, especially the manufacturing names. Okay, so that is the existing trend. The third opportunities may comes from the U.S. market reflections, especially in terms of the cutting edge areas. So for China, the same story also happened during last 1.5 year. The AI actually were the biggest driver for the performance of the Nasdaq. So we also seen in China market, especially for TMT sectors, okay, IT sectors, actually, the investment they also want to chase the AI trend in China market. So it also a very efficient way to do the reflections of the U.S. market in China. Okay, the last one is the value for money trend of consumption. Okay, for example, like the Uniqlo and some other names, Donkey, that grow bigger in Japan in past like 20 to 30 years, and their share price did also very well. So I think in China, there will also come up some new names correlated with such kind of the investment theme in next few years. So that is the some supplement I want to make in for this page. Next page, please. Yeah, so actually that is the my part. So I'll give it back to Phillips. Thank you.
Thank you very much, Mr. Ting, for all for the informative presentation. I especially enjoyed the part of the investment opportunities. I'm sure a lot of us have been constantly hearing the pessimistic news about China, about the negative news. But I think it's also important for us to look into the investment opportunities. What drives the market? What could make the market recover? What could put the market back in its place? And of course, for us, that would equate to being almost ahead of the market, as well as being able to get in at the best possible opportunity as well. And I hope everyone has enjoyed this glimpse into how many things Mr. Ting, as a portfolio manager, actually looks at before they make decisions about portfolios. And I hope everyone has been able to take in this information and hopefully make good with your own portfolio and your investments as well. So I would like for us to take a short break, so-called like a break, to just digest and absorb all the information that Mr. Ting has shared with us. And in this time, I would like to introduce everyone to our poems. Oops, sorry, I'm not clicking. To our Poems Mobile Tree communities on our new and improved Poems Mobile Tree app. If you'd like to be involved in other like-minded investors, have a platform for information sharing, stay updated with our staff postings and more, then I highly recommend that you download the Poems Mobile Tree app and join our communities today. You can actually just scan the QR code here. Okay. Additionally, for I know a lot of you are not actually. I see a lot of unfamiliar names, new names, not unfamiliar names. Hopefully, will become familiar names. You don't need a Poems account to view and post in our communities. Although of course, I highly recommend having or opening an account. Some of our more prolific communities. Let me just run you through a few posts. U.S. earnings updates for U.S. traders. You know, you always want to be on top of that. Growth stock picks and market updates, and even technical analysis, as you can see here in the middle post. It's all for free. Okay. The people that you are seeing posting this are actually our staff. If you look at the middle, Zane is actually one of our resident technical analysts. Oftentimes, he will take requests from people on the community, and like it's like someone will say like, "Hey, I'm looking at Netflix now. Can I have a technical analysis on it?" And within a few hours, or sometimes if you catch him at the right time, within a few minutes, you can have his analysis on it. And of course, we have our researchers down here. You see, his name is Ambrish. He's actually on top of the US earning highlights here. Easy to understand infographics, everything you need to know to learn and understand. And we also have our ETF specialist. He's over here to constantly give updates on new ETFs and all the articles that are coming out. It's difficult to stay on top all the time, so it's useful to have all these around. So once again, I'm just going to show you. Uh, if you would like to learn more about this, you can scan the QR code here and download our app to join our communities today. It should take you directly to the App Store or Google Play. And if you're new, and if you already have our app, then it should take you directly to the Communities tab. Okay, so Poems Mobile Tree Communities, like-minded investors, investment ideas, it's all for free. You can have it. After you're convinced, you can open an account, which I'll show you later on how you can do that. Okay, moving on. Let's say let's say in addition to mobile tree, let's say I want like communities on Telegram. So if you're more into Telegram, we have many Telegram communities available as well. The one that you're seeing over here right now. Okay, this is for my department's channel. Okay, we have US market updates, ETF news, all our events, including this one, and many other educational webinars by all my colleagues posted there as well. And if you'd like to find out more about communities on Telegram, you can just drop a comment anywhere here, and we'll get to you as soon as possible. We also, in case everyone's wondering, we also have technical analysis, we have global news, so all that good stuff that's on P3 we have on Telegram. You should have both. Now, before I continue diving into it, for anyone who earlier on has maybe some questions for Mr. Ting, don't forget that at the bottom of the screen, you have a Q&A tab. So basically, you just go there, type in your question, and the rest of us will be able to see it. Okay, now let's dive into it. Okay, Today I have a very simple agenda, only four agendas. Firstly, I would like to talk about some ETFs, namely 2839.hk and 3188.hk. These are the ones that will get you exposure into the Chinese markets. And the next two will be 3403, 3088. This will be more leaning towards exposure into the Hong Kong markets. And after that, we will touch on quickly on the benefits of investing directly into stocks, which I'm sure a lot of us do, or using ETFs, which is a tool basically. And finally, we will go through some Hong Kong value stocks that my team and the team at Phillip Hong Kong has come up with that we want to share with you. Along and lastly, I'll wrap it up with an exciting opportunity for you to take part in our lucky draw promotion. Anyone can win. All you have to do is trade Hong Kong stocks, but I'll tell you more about that later, okay? But it's only live until the end of the month, so stay tuned for the end of the webinar for that bit. Okay, enough with the promotions. Now let's just dive right into it. Let us begin with 2839.hk, the ChinaAMC MSCI China A50 Connect ETF. And as the name suggests, this is tracking the MSCI China A50 Connect Index. This offers investors a traditional long-term asset allocation, which also caters to the trading-oriented segment. And they also have an all-in fee structure. Now, if you're wondering what an all-in fee structure is, if you've traded with whoever you trade with, hopefully it's with us, you will know that, like, let's say for you trade in stocks, for example, then you have things like exchange fee, cash fee, and all that type of stuff. Okay, what an all-in fee structure is for ETF is basically everything: management, custodial, administrative, and all the other fees associated. They are combined into one. Okay, over here you can see a management fee is 0.3% per annum. Okay, this is good, of course, in terms of providing transparency. There is transparency. You can easily see the total cost of owning this ETF without being confused about, oh, I need to take in consideration this fee minus off this fee plus this fee. No need. All in fee structure, weigh the impact on your returns easily. Okay, the ETF is also priced as an institutional type offering, meaning that you generally have mm, lower fees and expenses actually compared to retail investment products. So as you can see from the chart over here on the top right, okay, the ETF has very, very high correlation and low tracking error to the index, and it follows it very, very closely as well. Now, what is it made of? Okay, as this basket comprises of about 50 underlying securities. The top 10 I have included over here that you can see. Okay, with very familiar names like Moutai. I'm sure a lot of people know Moutai. Me personally, not a big fan of Moutai, but it's here. Okay, a very, very famous alcohol producer in China. Okay, Foxconn. Okay, uh, everyone that follows tech should have heard about Foxconn already. Okay, it's part of Apple's production line as well, Foxconn Industrial 601138. Okay, BYD, uh, also very, very famous stock. Okay, the EV maker, like BYD. And you can also see the sectors and allocations that I have here in this pie chart. Okay, this ETF is largely dominated by financials, 19%, industrials, 14%, and consumer staples, 13%. Or I believe there's an info tech sector after that as well. Okay, so this is 2839.hk. So I'd like to move on to the next one now. Okay, ChinaAMC CSI 300 Index ETF, or 3188.hk if you want to look for it. This is the largest A-shares offshore ETF in Asia in terms of AUM. Additionally, also the most representative ETF that fully reflects the overall performance of the A-shares market among Hong Kong listed pure A-shares ETFs. It also provides good comprehensive, it's so many. It provides good comprehensive coverage of the value sector and growth sector. Okay, includes the following sectors as well in case you're thinking about it. There's energy, raw materials, industrials, I believe healthcare, financials, real estate, information tech, telecommunications, utilities, all inside. Okay, next slide. There are also familiar names. Multi is back again. You see here. We mentioned this earlier. Ping An Insurance. People who are more avid in the Hong Kong China markets definitely know about Ping An. You definitely have heard about it. China Merchants Bank as well. Okay, one of the top banks in China. Although, one of the top banks in China. Okay, so although this has a very large basket of equities, is dominated mainly by financials, industrials, and information tech. You can see the percentages here, roughly about 21, 15, and 14%. Okay, The CSI 300 index that this ETF is replicating, okay, is also comprises of the most representative securities in the Shanghai and Shenzhen stock exchanges that have large market cap and good liquidity as well. Okay, so just roughly take a look at this. This is what the ETF is about. I'd like to move on. Okay, China AMC Hang Seng Tech Index ETF 3088.HK. Now this ETF, pretty straightforward, provides investors with 30 leading companies of technology with high growth, liquidity, large market cap. Now, this ETF methodology includes a rapid IPO inclusion mechanism, okay, with a quarterly review. Therefore, also, if you see the lines over here on the chart comparison, you basically see them overlapping each other. Okay, it has a very low tracking deviation, very, very close to the real market performance as well. Okay, and in case you're wondering what I mentioned earlier by that rapid IPO inclusion, newly listed companies can be quickly added to the underlying index. Okay, hence rapid IPO inclusion. Oops, sorry, I blocked my camera. And tracks the process to get timely inclusion as well. And also, rebalancing every 3 months ensures necessary adjustments are made to meet the criteria and changes in market condition or company fundamentals. Okay, as you can see from the chart here, consumer discretionary, really huge, 41%. Okay, followed by communications with about 30% and IT at 24%. Okay, there are many, many familiar names in this one. A lot of people are familiar. We get a lot of questions on the Hang Seng Tech Index as well. Okay, now, many, many famous companies, Meituan, Xiaomi, Tencent, Alibaba, JD. I wouldn't be surprised if the top five, everybody in the audience have heard of them at least once before. And of course, if you work in an office, you definitely heard of Lenovo. That's your laptop. Okay, and of course, a few others that are more closely related to our Chinese and Hong Kong friends. Kuaishou, and maybe if you play some games, NetEase. Okay, so all these are very, very familiar. Okay, so this substantial collection of consumer discretionary companies tends to reflect the growth potential in consumer spending and e-commerce in China. And for communication services like Tencent and Meituan, they're strong in their own rights in the digital and internet sectors as well. Okay, I just want to move faster because it's 7:53 already. Okay, I'm going to move quick. Lastly, for the ETFs portion, okay, we have 3403.HK, the China AMC HSI ESG ETF. Okay, it tracks the HSI ESG Enhanced Index, which has a very high correlation with the Hang Seng Index. It has layered screening, including ESG risk rating screening, UNGC, I believe, screening, and controversial product involvement screening. So this index is also free float adjusted market capitalization weighted with the tilting applied according to the ESG risk ratings. All those stuff that I mentioned earlier, those are ESG risk ratings. Okay. Uh, Free float adjusted also means only shares available for public trading considered in the weighting process and not shares that are held by governments or other strategic entities. Okay, this also adjusts the weights of the company in the index based on their ESG ratings. So companies with lower risk ratings and better ESG practices may weigh heavier in this ETF, and vice versa. Higher risk ratings may weigh lesser in this ETF. This is good for investors, of course, who want exposure to large publicly traded companies while also prioritizing ethical and sustainable business practice, which is very, very important for us now. If you love trees, consider ESG. Okay, so quickly going through some of the constituents, we see again a lot of familiar counters here as well. Mentioned earlier, also dominated by financial, CD, and real estate sectors. A lot of familiar, Tencent, AIA, Hong Kong Exchange. Of course, you heard of that if you traded Hong Kong. Ping An Insurance, Meituan, Xiaomi, HSBC. Okay, Alibaba. Okay, so here's just a quick summary table of all the ETFs that we've gone through. Okay, if you're on your phone, take a quick screenshot. If you're on your computer, use the snip tool, get a quick screenshot of this. It's good to know. Okay, and also if you're considering um, getting some exposure into like you look at your portfolio and you think, I need some exposure into Hong Kong, China. Why not consider these four ETFs as well? So take a quick screenshot. I'm just going to pause for 3 seconds while I get some water, and then we'll continue. Okay, hope you all got your screenshots. Okay, now let's talk about stocks or ETFs really quickly. Owning a stock to a successful company This, of course, gives you significant gains, especially investing in the long term. I know a lot of us invest in the long term as well. Some of you have invested for longer than me, maybe even longer than I am old. Okay, and you have greater control over your portfolio, choosing companies you believe will perform well. However, of course, with all these upsides, you will be incurring some higher risks in the event that the company that you invest in performs poorly. Everyone has ups and downs. Hopefully all of you have more ups and downs. Now, also, there's less diversification. Now, this is important. I'm going to talk about that in a short bit. And exposure to company-specific risks, of course. So a single bad company can hurt your portfolio, unfortunately. Now, for ETFs, instant diversification. One single purchase, instant diversification. Spread your investment across multiple companies, reduce your risk. Now, because they're diversified, ETFs are generally considered less risky than individual stocks. However, while offering lower risk, ETFs typically can have lower or narrower potential returns. Now, what's best for you depends on your investment goals and risk tolerance. Now, let's move on to some value stocks quickly that our teams have come up with for your consideration. Okay, Bank of China, 3988.HK. Everyone has heard of us. They have branches here in Singapore as well. So what you're seeing here is the performance from last year, and these are some common indicators of growth. Now, as you all can see, all of it has increased. Now, I actually took this from their annual report. Okay, particularly the net fee and commission income, which has grown more than its peers in the industry. Now, if you're confused what the bottom left, the PPOP is, it stands for pre-provision operating profit, which is the amount of income Bank of China made before accounting for funds set aside to settle like bad debts and such. It is an estimate of their operating profit as well. So quickly want to take a look. Okay, capital ratios. So we can see their total capital ratio is on the rise from last year at 18.52% recently. Now, the total capital ratio, if you're unfamiliar, is the ability to absorb losses and sustain operations during periods of financial stress or losses, such as market and credit risk and loan defaults and things like that. NPAs, which are non-performing assets, interest rate risk and foreign exchange risk, just to name a few. Now, CET1 and Tier 1 capital ratios have also increased slightly. The difference between the two is just the inclusion of AT1, which you can see here. I've explained additional Tier 1, AT1, okay, which is less liquid and secure than CET1, but still considered high quality, such as perpetual bonds. Okay, moving on. CNOOC, if you've not heard of this, I don't know what to say. You should hear about it. Okay, so next we'll move on to CNOOC. AA3.HK is the largest producer of offshore crude oil and natural gas in China and one of the largest independent oil and gas exploration and production companies in the world. Okay, from the period of 1st January to 31st March 2024, the all-in cost, okay, the all-in cost was controlled and reduced by 2.2%. And here you can see in the graph, you can see the comparison from last year. The cost was reduced to 27.59 US dollars per BOE, which is per barrel of oil equivalent, which means last year to produce 1 barrel of oil was 28.22 USD. Recently it was 27.59 USD. The lower the cost, the better the margin. Okay, moving on. Okay. Now, another good point as seen here, okay, is that in Q1 of 2024, the company's net oil and gas production was 180.1 million barrels of oil equivalent, which is an increase of 9.9% year on year. Now, CNOOC, earlier on, I believe we heard Mr. Tsing talk about those companies that go abroad and they go abroad and they tap on the potential from overseas markets as well. Okay, CNOOC has onshore and offshore overseas production. Okay, the dark blue portion you can see is the growth in China, which is mainly attributed to increased production from new oil and gas fields, while overseas growth was mainly due to production increase in a country called Guyana. And of course, we know this country, Canada. They also have oil fields in Africa, North America, and Europe as well. Okay, moving on. For our next stock, we have China Mobile, 941.HK. Firstly, we see outstanding performance. Okay, everything is up. Okay, of something called CHBN markets. CHBN being customer, home, business, and new markets. So in the year 2023, they have maintained growth across the board for all these aspects. I just got to move quicker. Okay, they have also basically achieved continuous coverage across China with their almost 2 million base stations positioned nationwide. Okay, They have also built infrastructure for the circulation of fundamental data elements by launching the industry's first data switching service network platform. Okay, added on to a few other things. I don't want to go through too much detail because we're running out of time. 5G new voice network, VoNR, upgraded voice service and roaming capability, along with many other up and coming things like passive Internet of Things, AI empowerment as well. Okay, lastly, we have Chow Tai Fook Jewelry. I'm sure many of us know this name. Okay, many of us have even bought from here. Okay, the charts here show the breakdown of different markets for the company. Most of its profits are derived from mainland China, as you can see on the left, the yellow bars. And for Hong Kong, Macau, other markets, the recovery was also a big jump of about 57.7%. Overall increase was 6.4%. So even though the revenue in China remained largely unchanged, okay, on the right is defined by the product set, okay, with 80% being gold jewelry and products. Usually when the economy is good, the demand for the gem set, platinum and K gold jewelry will be higher. But in a more sluggish economy like what we faced last year, gold will outperform it. And also as a non-interest bearing asset, the opportunity cost of holding gold will decrease during the interest rate cut cycle, and the fall of the US dollar will also benefit the fall of the US dollar will also benefit gold prices. Now, I've actually come to the end of my portion. Okay, earlier on we were talking about P3 and everything. So if you like to open an account, take a screenshot, consider us, take a just take a screenshot, take a picture, scan the QR code. Okay, if let's say you want us to assist you with this account opening process, no problem. You can email us at talktoglobalmarkets@phillip.com.sg as well. Okay, now let us move on to the Q&A session. We're just going to do a quick Q&A because it's 8:02 already. I apologize for this. So if you have any questions, now's the time. Mr. Ting, let's move on to the Q&A session.
Okay. Also, from the chat box, I saw that a question from audiences was the recommendations on AIA stock. So actually, we don't give recommendations on specific stocks, but actually, the AIA actually from the fundamental levels, actually, we saw that is increase is dividend payout ratio to 75%, and also to add more in terms of the share buyback. So actually, from the perspective of the investors, return, we have to say that is becoming better. So that is the a good points. And also from the fundamental, especially top line and bottom line level. So actually, it also highly correlated with the domestic economy, especially the citizens, the behaviors in terms of the expenditures in terms of the insurance products. So actually, I think it still need few times of especially few quarters to generally gradually recover from the very weak level. Yeah, so that is some highlights I want to share with you. Yeah. And then the second question, I think is for you.
Okay. Maybe I'll take over some of these questions here before we end off with the promotion. Thank you so much, Mr. Ting. Now, so how many markets can we trade poems? Actually, we have a lot of different markets. You can head onto our website at poems.com.sg. Okay, we got many different Asian markets as well. Me personally, I'm in charge, or rather, I'm part of the team that is in charge of the Asian markets. We got Australia, Taiwan, Korea, Hong Kong, many markets. You can take a look over there. We got US markets, of course, London markets as well. So you can take a look on poems.com.sg. I have a Nova account. Is it the same as Poems? Okay, for this, Nova is actually like our sister company. So actually for this, I believe it's not the same. You can reach out to your representative in Nova. They will actually guide you on how you can trade this. Okay, how can I buy Hong Kong shares in Singapore listed in Hong Kong? You can actually buy it through Poems. We offer Hong Kong stocks online as well.
Yeah, this question is why do price moving inversely from the IBM? And so actually, yeah, Baidu actually is one of the leading large language model providers in China. So if you talk about the LLM. So yeah, Baidu is the one of the leaders in China. But actually, to now, the the majority of the top line, the revenue from Baidu comes from the advertisement, especially the search engine advertisements. Actually, in terms of competitive conditions or situations, actually, it's becoming quite severe because that actually the clients tend to pay more in, for example, the short video platform like Douyin and Kuaishou in China, as well as some other like short video channels from WeChat. So actually, in terms of the structure, actually of advertisement have already gradually changed from previous years. So that the top line and bottom line of Baidu actually they face some challenges in recent quarters. So that is the reason why I think it's a poor performance of the share process for Baidu. Should invest or should not? So actually, I believe short term still face some challenges. Actually, I think we need take more months or quarters to see systematic opportunities to do that. Right. Next questions is the property sector turnaround any more stimulus from governments for sure, because the conclusion is not that the property sector turnaround is still not turnaround. So from the investment and the new sales of the real estate in China, it seems the drop like over 10% from previous low level. But luckily, actually, when it comes to the second half of this year, we comes to a low base. So it has chance that such kind of the investments or new house sales in China can be more, stabilized. So if not, we believe that still have room from the Chinese government to do the stimulations in terms of the real estate market. Because as I mentioned, since April to May, those policies issued by the Chinese government, they just lift the original limitations on the real estate market rather than to issue some supporting measures. So that is the that is answer for the question.
I think, Mr. Qing, we have time for one more question before we have to wrap.
Okay. I believe that the BABA really okay fundamentals now. Yeah, from the fundamental level of BABA, actually, we do see that the signs of the bottom heading, especially from the last month, which is the 618, the sale promotion, the data is quite okay. Okay, actually, it generate like the high teens of growth compared with previous years, and so here now the biggest challenge for Baba is still the platform like PDD or TikTok or Douyin. So probably we may see more months to see whether such kind of the trend can continue. If so, we believe that the Baba really hit the bottom, and so actually it's a quite good period or entry point for next few years, because we think still has a potential, no matter from the e-commerce or cloud computing. So that is the answer. Thank you very much. Yeah.
Thank you very much, Mr. Qing, today. Now, everyone, before you go, Before you go, I have something important that I would like to share you. Before that, yes, there is a recording of this webinar online. There will be one. It will be out before the end of this week on the PhillipCapital YouTube channel. If let's say you would like to review something that Mr. Ting mentioned and you would like to listen back, maybe slower at your own pace, you can just head on to our YouTube channel at PhillipCapital. Okay, 1L, 2L, 1P. Okay, Phillip. Okay, Capital. YouTube channel, and take a look over there. Now, before I wrap up this webinar, we are having a Hong Kong listed equities and ETFs promotion. Now, what is this promotion all about? Okay, if you are a Poem's client or you open a trading account with us now, okay, and trade in some Hong Kong buy trades, okay, you actually stand a chance to win some air tickets to Hong Kong, a night stay at Shangri-La Hotel Sentosa, or a mystery gift from Chow Tai Fook, which we talked about, along with some gift cards like Samsonite, Xiaomi, Hai Di Lao gift cards, and some cash credits available as well. Now, in order to make this a little bit more fair, I know some people are like, oh, I'm a US market trader, but then there are so many people trading Hong Kong markets all the time. No worries, okay, we have actually divided you, okay, into clients who have traded in the Hong Kong market, okay, from 2nd January to 10 May. You can see, let me just zoom in, okay, from 2nd January to 10 May. If you traded, you will belong in one category. If you did not trade, you're a new client, then you will belong in another category. So there are actually two prizes that will be drawn. Now, how we will announce will be on this webpage as well. We will do a live lucky draw, and then we'll show you all the account numbers. If you're a winner, we'll contact you via your trade rep, or we'll contact you directly within 5 working days. Now, a few things to take note of, okay, is that this goes by buy contract, which means that if you bought one lot of Meituan, later on the same day you bought one lot of JD, okay, these are two buy contracts. You get two chances in our lucky draw. But if you bought one lot of Meituan and you buy the same counter another Meituan, these two will go into one contract and you get one entry into our lucky draw. Okay, just to cover it briefly. So don't miss the chance. Uh, the promotion is actually live now, okay, but it will cease to be on the 31st of July. So if you're already a client of ours, we have a lot of different information that you have. Like I mentioned earlier, the communities. We have a strategy and stock pick this. I think it's this Friday as well. Go to our website and take a look at that as well. The Hong Kong China uh, webinar will be on this Friday, if I remember correctly. So go to Point's website on that. We got investor notes by Phillip Hong Kong as well. So a lot of information for you to aid you in your Hong Kong investing journey. Now, I would like to thank Mr. Ting and his team for giving us the webinar today and all the information that has been given to us. I hope sincerely that everyone has taken something away from this and you have learned something new. And thank you very much for joining us today. For those who haven't had dinner, now's the time. And thanks so much for joining us. We hope to see you all at the next webinar again. And we'll close the webinar for today. Thank you so much.